Good morning, pregame crew. How are you doing? Happy Valentine's Day. Happy CPI Day. I hope you are well. You're at the pregame show, and this is a show where I go over indices, commodities, crypto, movers, and shakers of the day. My goal is to get you ready for the trading day. So I have notes. They're off screen, and they're going to be somewhat of a mess once CPI hits. However, my levels won't be. So let me get to my notes. All right, on the other screen, I'm going to say hello to my friends, do an audio visual check, and take a couple chart requests before we have CPI in 8 minutes. Thank you, Night Truck. Good morning, Greg, Lori, Akin, Andre, Carlos, Casey, Night Truck, Mighty Pond, Sam, Matthew, Whitney, Sal, Mal, that rhymed. Hey, Carlos, the other Carlos. Hey, Roger, Homebody, Ed, Paul, Slow Devil. Oh my God, Slow Devil. I do the worst accents. It would be disgusting. Hey, Caesar, sir, Cole, Mary, Keith, Rachel. Hey, Jorge. I will. Hey, B-Hawk, Robert, Christine, Matthew, Patrick, Commando, Joka. If any of you don't have a Valentine's, I want you to be my Valentine's because I appreciate and love that you're here. And you are important to me. When y'all are gone, I miss you. Good morning, Dave, Saeed. All right, let's go back up. Do we have any chart requests? I posted my levels, by the way, at the top here and here. I posted the first levels I posted were not correct. Sorry about that, or the chart wasn't correct. All right. We're going to get prepared for CPI as well. In 2 minutes, I will start showing you what the expectation is and what the potential reaction is and what the odds are. But I'm going to do one chart request before we get started. You know I do gold every day, you silver bug, you, Matthew. Silver was looking like a potential falling wedge this morning. It was getting those lower lows, but once I drew the trend lines, it really was busted because it didn't have that nice shape and wedge shape that we like to see in falling wedges. However, we are getting lower lows without a ton of follow through. So I was noticing that on silver. And of course, silver will be greatly impacted by the CPI. On the next bounce, you're looking for a daily lower high. You're looking for a weekly lower high. Hourly could be a bear flag. In my opinion, you can do nothing with silver, again, in my opinion, till after CPI is over. And gold, same thing. You can't do a lot with it here. CPI on its way. Daily lower high anticipated. It has enough room for a weekly higher high. I guess the same mentalities there. We got lower lows here and here without a lot of follow through. We didn't get that third lower low. Bulls are taking a stand here at the 4-hour potential higher low. 1860s resistance and 1874.90 is resistance. Hey, Kipu, Trader Bennett. Atenlay and Igpay, that would not be my strength either. Maybe I don't have a lot of strengths outside of technical analysis. Good morning. Flowcoin. And then we will do CPI prep. I know not to type Flowcoin. I am like an amateur hour. Flow USDT right here. Weekly has enough room for a higher low. Doesn't mean it's guaranteed. Daily, bulls are trying for a double bottom here, but we are in a downtrend. 4-hour downtrend. Hourly downtrend. On the next bounce, bears could be looking for a top fish against 103.6. All right, let's get ready for CPI. I'm just going to go ahead and introduce myself as if it's 8:30 Eastern. And I should have mentioned it's Tuesday, February 14th, 2023, 6:26 a.m. Mountain Time, 8:26 a.m. Eastern Time. CPI and Valentine's Day has me all over the place. So, good morning. This is who I am. I'm Chart Gal Lori, and I'm part of the Chart Guys community, and we teach technical analysis. So, coming up in just a few minutes, this is 3 minutes now. Okay, 2 minutes. We have CPI data, and what the economists are anticipating is 6.2. What does that shake out to be? JP Morgan is predicting if it's above 6.5, the odds are 5% that it would be above 6.5. We could be down as much as 2.5 or 3% and all the way down. And these are the logical, fundamental probabilities. However, just because it's logical doesn't mean the market acts logical. It could be 7% and the market rip. There are no guarantees to these inverse or correlated relationships. There aren't, but I do believe this is a really good guide. 6.4 to 6.5, we could see a slightly down day. 6 to 6.3, slightly up day. Below 6, they think we're going to have a raging bull. So this is the percentage year over year that our consumer price inflation has gone up. Consumer price index. So they're expecting 6.2, and I'm going to have this front and center. So once we get the reaction, we can somewhat gauge it. There are no guarantees. And if you miss my levels, they are in chat. I'll have to drink water before CPI hits, but here are the levels. This is the most important thing to me. This is way more important for me than that is, all right? Because once we get to a key level like 4,200 psychological, and we're unable to get over it, that tells me something about the bulls. That tells me sellers are taking over. If we get down to 4,060 and we break through, that tells me something as well. If we hold it, that's where buyers are playing defense. So I would map these levels if I were you, especially if you're a futures trader, you need to have your levels ready. Yeah, they did change the formula, and I posted the article as to how they changed it. All right, so we have 1 minute. If someone could grab the CPI number as soon as it comes out, I would appreciate it. All right. So the dollar will have the most extreme reaction, and typically the equities act in inverse to the dollar's reaction. Not a guarantee again, but that's typically what happens. And what dollar bulls want to see is they want to see a dollar trend change. They want to see it get over 104 in the daily 50 MA. And that could change the tone of our overall market. And I'm leaning more bullish via the table, but CPI will have a lot to say about that. All right, let's get the number. It is 6.4. It is higher than expected, and we are coming down hard. We're coming down hard. It was higher than expected, meaning the consumer prices are more elevated than what they anticipated and forecast at 6.2. So at 6.4, the odds were 25% that it would be 6.4. So that's slightly low. So that means the unexpected has happened. 0.75 to 1.5% down reactions expected. It doesn't mean it will happen. However, that is a bearish number in general. Now let's break it down in just normal human terms. Last year, same month, our inflation has gone up 6.4%. We're paying 0.2% more for things like used cars, housing, apartment rent. We are paying more money. That's why it's bearish. So the efforts by the FOMC are not working as well as one had hoped. So more interest rates, higher interest rate hikes are possible. Good morning, awesome. Hey, Gumby. Yep, they changed it. Okay. Now let's go look at the dollar. The dollar, we got a little bounce up to 103.21, unable to get over the high of the day, 103.26 here, unable to get over that high. So let's see how the market bulls recover. We have a lot going for us in the market. We have a weekly uptrend. We have a 4-hour uptrend, and we had an hourly uptrend. Now let's go change that. See. Here, so we lost the hourly uptrend. Bulls are buying the dip. We have a lower wick of bulls buying the dip here. Okay. I'm just going to look in chat. When my TCGers message me, I have to stop and pay attention and make sure there's nothing, no audiovisual problems, or that they don't need anything. Okay, we're recovering quite well here. And your resistance is up at 4170. Now be careful. Take this idea with a grain of salt. I would feel comfortable top fishing 4170 if price pauses in that area. Right now we see no sign of it pausing. Bulls are taking back over. So I'm just watching these levels. Okay, we're over the 4170 and I just watch. I'm not in a trade. I'm watching. The next level is 4179. And then I go to a 1 minute. Sorry, y'all, about all these alerts. Go to the 1 minute and see if you can get a stair step and maybe even the 15-second. Yep, 15-second has a stair step. So you could look for a possible top fish setup now. Careful, careful. When we lose, or if we lose, the stair step pattern. So right now that would be a loss of 417750 on this candle if we were to lose it. And you put your stop over the high of the move. There, you enter short there. And then you put your stop over 418650. Doesn't mean this trade idea will work. It's just an idea of how I trade reactions. Now you should be able to take some profit off. You got 7 points to the downside right there. I would take that gift horse and I would take it to the bank and leave one on if you have multiple contracts. There's low bear volume on this pullback. You see this? So this may not be a sustained pullback. So be quicker in taking your profit. I hope that helps somebody. That's probably the best I've ever been able to articulate a reaction trade. So that's how I trade it. I look at the numbers and I digest it personally, saying, crap, expenses are going up. I see it in the grocery store, price of deodorant, price of eggs. I see it, and now it's coming to fruition, and we could have higher interest rate hikes. So mortgages, home loans, everything could go up. I digest all of that. However, Trader Me is the only one that has a hat on, because that's what's paying the bills today. So Trader Me just looks for a trade setup, and so I hope you were able to get part of that. Quite tame, Patrick. I don't know that this was a tame reaction. No, this was a 50-point run in one direction. So we went down pretty hard. Let's see. We went down about 25 points, then we reversed 50 points. I would say that's pretty whippy action. Okay, you have 10 points to the downside now. You're sitting pretty. I'd take profit on that because this bear volume is still pretty low. All right, did that make sense? Because I think I explained it well, but I could have just totally botched it. But I think I explained that trade idea pretty well. All right, so let's get started with the show officially. The real reaction typically starts after the market opens. So the algos digest it one way, and then cooler heads prevail, and the humans intervene, and they're like, wait, that was a bad number, or wait, the formula changed. Maybe it wasn't that bad of a number. So then the humans have to use their logic to figure out, is it bad, is it good? And that's when we get the real reaction. Okay, so bulls recovered pretty well, I must say. 418825 acted as resistance, and that gave us our top fish level using that stair step pattern. Again, I can't paint a better setup for you as to how we teach people to trade. And in that scenario, it was a top fish setup using a stair step on a very small time frame, 15-second, because you have to be fast with futures. Awesome, Night Truck. I'm glad it made sense. Okay, let's get started with the show. Let me pull up my notes over here. So let's start with the dollar. The dollar's pulling back pretty hard. We have broke the low of 102.641. We hit 586. Now, dollar bears will be looking to top fish 103.837. The size of this pullback, look, when you go from a lower high, higher low, higher high, lower low, those are typically my areas on the next bounce. I'm going to look for top fish due to the size of the retracement. All right, the size of the retracement. Bulls are not playing a lot of defense here at all. That's on the 4 hour. I would be looking for a lower high. On the 5 minute, bulls are playing a little bit of defense. And where the dollar stopped is where ES stopped and reversed because they're inverse. Oh, good, Augustine. I'm glad that made Augustine, sorry. I'm glad that made sense. Hey, Norma. All right, so ES, we're holding the hourly EMAs just fine. We're holding them just fine. So yes, we're pulling back from that reversal. We're pulling back, but we're still okay. No harm, no foul, no major damage done. So now you mark off the high and the low of that reaction, and that will tell you everything for the rest of the day. Gosh, I hate deleting my levels, but this is no longer valid. That's no longer valid. That's no longer valid. Okay, so now the high of the reaction, 418650, and then the low of the reaction, 4132. We could bangarang in between these two items. Did my magnet go off? Why didn't that hit? We could bangarang in between those two levels all morning. And we also have, just so the hits keep rolling, we have member Harker speaking at 11:30 Eastern, member Williams speaking at 2:05 Eastern, and of course we have API estimates after hours. So we do have Fed speak today. Man, you got 30 points now on that short. I'm a little jelly that I didn't take it. I have my broker pulled up as well. A little jelly, I must say. Doesn't matter. If you got it, it's all I need, and happy Valentine's Day. Okay, so bulls will be looking for a bottom fish compared to 41.32. It doesn't mean it'll work. You have to have a setup within that thesis. The thesis is, hey, let's look for a bottom fish against 4132. And then I zoom in on shorter time frames. Is there a stair step? Nope, that's a potential little bear flag there. So I have bears are not pausing. I can't just step in front of it. I have to have something that triggers me into the trade. Either inside bars, an EQ, a stair step, something has to trigger me into the trade. I just don't carte blanche buy it. All right, so ES, the 4 hour bull flag confirmed overnight. The CPI reaction is coming back pretty hard because we had such a big miss on the data, and calmer heads are saying, yeah, it really was terrible, so let's take this down a bit. All right, NASDAQ. Joy of missing out. That's right, Mal. Teach it. Okay, 4 hour, we've lost our uptrend. Hourly, we've lost our uptrend, and we're threatening to lose the EMAs here on the hourly. The high of the reaction becomes everything, and the low of the reaction. If bears are able to take out the low of the reaction, I would even go as far as to say we could be looking for a potential, and I choose my words carefully like a politician, a potential trend bear day. If we take out the low of the day, that means the bears are large and in charge. Okay, and really paying attention to the NQ chart. 11460 is important, and then the high 11687. RTY high 1964, low 1935. Now I can almost delete every level I have on my chart as far as indices, and it becomes all about the high of the reaction and the low of the reaction, and that tells me what the tone of the day is. And yes, it's the same on all of these. So just interesting. YM had a different setup than everybody else this morning. If you've been here a while, you know I've been watching this broadening formation on higher time frame. Well, this struck me as potentially bearish this morning. Look how YM got over the February 7th levels and the February 9th levels, and it was still a broadening formation. I drew it on the 2 hour. That's why that bottom trend line makes no sense. There we go. So for me, I was like, is this a bearish omen here, this broadening formation? I drew this a couple of hours ago, so I thought that was interesting, and it is working. So YM made a higher high over last week's high compared to the other indices. However, it was a broadening formation where we were getting stretched to the upside and to the downside, i.e. higher highs not getting followed through, lower lows not getting followed through. So I found that to be super interesting. It's all about the high of the reaction and the low of the reaction. VIX, yeah, hit the like button. There are 440 of you and 111 likes. Come on. Come on, man. All right. So VIX, is it recovering or is it a bear flag? It's recovering, but a 5-minute lower high is anticipated. If that lower high gets set, or when that lower high gets set, we could expect a bounce on the indices. Hang Seng was red overnight. DAX is up ever so slightly at 0.46%. And the other little bitty canary for me was Bitcoin. Look here. Here. And here. And really YM. So the three items that I had this morning looking at me saying, whoa, 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 somebody may be telling a lie. It was bonds. That should not be green. That should be turquoise. It was bonds, Bitcoin, and YM. YM had that broadening formation. Bonds are in a 4-hour downtrend, and Bitcoin was still in a 4-hour downtrend. The indices were able to make 4-hour uptrends, and Bitcoin was not. So Bitcoin, we have a clear double top here at 21,900. Short it till the cows come home. How about that? Short it. Short it at 21,900 until it stops working. 21,903, we got a triple top in that area. It ain't rocket science, y'all. On the next bounce, 15-minute lower high is anticipated. And y'all know that there's always exceptions. I'm not saying regardless of what happened, short Bitcoin 21,900. However, it should be a nice risk to reward trade because you have your risk clearly defined. Ethereum. We have resistance at 1526.64, 1526.20. We got a double top. Same thing applies. As long as these resistances are super clear and dummy proof, short them. As long as they are clear and dummy proof. And you know, there's qualifiers on everything. Gold. All right. Gold is bouncing. Dollar must be pulling back a little bit. Gold, it's all going to be the high of the reaction and the low of the reaction here and here. Weekly, gold is set up very well on the weekly. And we always need to give more weight to the higher time frame. And let me show you that here. So on the weekly is the most important for me on ES. And then if I would add monthly here, monthly would be the most important. The higher time frame is the most important, and they decrease in the order of their importance as we go down on the time frame. So if I'm looking at the 4-hour of gold, I'm dogging it in my head saying this is bearish, can't get over the 21 EMA, weak sauce. And then I zoom out and say, whoa, weekly high or low is absolutely expected with the size of this move. And it's just, where is it going to be put in? So the weekly tells you don't get too bearish on gold. All right. Oil. Thank you, Luciano. I appreciate it. So oil. Dan was watching a 4-hour rising wedge last night on the video, if you watched his video. And now we're getting follow through on that falling wedge. I think a top fish of 79.61 makes sense. We have API estimates after hours at 4:30 today, and we have inventory tomorrow at 10:30. So we have an hourly downtrend, 4-hour downtrend, and daily lower high is most likely set now at 80.62. Top fishing makes sense to me on oil against 79.61. Okay, nat gas, they're trying to get something going, but then I zoom out and I do exactly what I did on oil. Let's go to the monthly. Downtrend, weekly, downtrend, daily. It's an EQ, but it's still a downtrend. 4-hour, the bulls are trying to get something going, and look what happens. They waste all this buying power just to give it almost all back. That this keeps happening over and over and over. So the benefit goes to the bears. I was trying to think of that game where they advantage, like they give one player an advantage over the other. So I'm pointing to the bears. The bears have advantage on this chart as long as these higher time frames look like this. And I just want to show you the yellow candles just mean inside bars. If you're interested in my chart setup, you can click on the link below in the YouTube video description to receive a PDF explanation as to what all this is on my chart. So these are inside bars. So we have a lot of misdirection. So we now know weekly inside bars. Now does this make sense? The drunk girl walking home from the bar in high heels? Doesn't it make sense? All of this misdirection as we probe liquidity to the upside and to the downside. I have never seen so many people so anxious to buy something that is so beaten to the ground. Just because it's beaten to the ground doesn't mean it's a deal. It could be a deal. It could be a smoking deal. But just because it's beat down, that's not reason enough to buy something. Make the bulls prove it with their feet. You know, with voting, they say prove it with your feet, like you got to go prove it. Bulls have to prove it. You can't just tell me it's time to buy because it's beat down. Prove it. This type of volume, sure, that's wonderful, but y'all know the shenanigans they like to play in pre-market. Don't get caught up in it. Be careful. Hourly has enough room for a higher low. An aggressive, ridiculously aggressive bull could look to buy a pullback for an hourly higher low, knowing you've got a weekly inside bar on a higher time frame, and you could get whipped around. All right, Apple, the high of the reaction, 15520. Let me verify that. Yes, and the low of the reaction, 15275. That becomes the most important levels on Apple. And would you look at that? We hit 15520 and we held this resistance 15523. So our technicals still come into play regardless of these emotional reactions. We still have the majority of traders out there are computers, and you need to remind yourself of that a whole lot. So if you had a computer and you had an algo, what would you tell it to do? If Apple gets close to 155.23, if it comes within 0.5% of that, short it. And that's what they did. So these exact levels, a lot of computers are involved. Okay, 152.76 is your intraday support on Apple. Let me go back to ES. I just want to make sure I'm setting the right tone for us today. If I'm saying the most important levels of the day are the high of the reaction to the low of the reaction, if I were you, I'd get a fib and pull it and say, okay, we're at the 0.382 retrace. I think a bear could be looking to top fish in this area here at the golden pocket. If we stay below 0.5, a 50% retrace of this move, then a higher low is not necessarily guaranteed. We could have an EQ, we could have a higher low, or we could have a lower low. So bulls are trying to play a little bit of defense here. Okay, back to Amazon. We hit $100.53. Let's look at the daily on Amazon. Odds favor lower high on the daily. Odds favor it. So big bounces on Amazon, first hourly overbought. Even if we were to run today, that would be a top fish setup looking for the daily lower high with a reverse back burner on Amazon. So Amazon, I'm going to stay bearish as long as this daily chart looks like this, because bounces are for shorting due to the most likely scenario. Hey, Derek, thank you for being here. All right, so NVDA, daily inside bar yesterday. We have a gap up here at 22120. I like to mark gaps on my chart because they sometimes serve as magnets. So we have work to do, but a daily higher high is not out of the question with NVIDIA. We're holding this daily 8 EMA, just whistling Dixie up here, totally fine, no big issues. No big issues like Amazon. So 2222 is your resistance, and you have that gap at 22120. Don't forget about that overhead. And it's just going to come down to how do we navigate that high and low. We're already at the 65% retrace. So bulls are a little bit hungrier on NVIDIA, as I would anticipate. And Tesla, I typed it out and I'm like, it's not true, but it just was funny in my head. Tesla may have 99 problems, but the 8 EMA is not one of them. The daily 8 EMA is holding fine. Look at that lower wick of bulls buying the dip. A higher high is totally possible. Bulls are set up very nicely here. They need to get over the hourly 50 EMA, that Great Wall of Louisiana. ENPH, that is a double D, double daily inside bar. And I realize I bring you these sometimes and I don't have a bias. I bring it to you. It's like I should have a thesis. I should have some type of thesis if I bring you a setup and not just say, oh, it's got double daily inside bars, so it's tight. Watch for a breakout or a breakdown. I would have to err on the side of bearish against 217.07 for a top fish play on this double daily inside bar on ENPH. Microsoft, it's strong until it isn't. Again, it has 99 problems, but the daily 8 EMA is not one of them. Look how much farther above the 8 EMA than even Tesla is. It's had relative strength. I actually like a buy against 270 on Microsoft if the market is getting its act together and being constructive. I like a buy against 270 for Microsoft long. PLTR, they had an earnings beat. They were expecting 3 cents a share earnings. They did 4 cents a share. It sounds like a big whoop, but that is a pretty big beat. And they beat on revenue because of all the defense contracts they had come in the fourth quarter due to Ukraine. So this could be a gap and go situation. I think a pullback buy makes sense against 847 if you can get it, and then stop out within a few pennies if you're wrong. You could use 850 or 847 as your stop. I like a pullback buy or a stair step buy on PLTR. All right, let me look at my notes. I only had 3 names this morning because it's hard to get names and scenarios put together for you on CPI day because things get blown up in about 4.2 seconds. All right, I have time for 1 or 2 chart requests. Microsoft, I like long, Dominic. I'm going to stay with the relative strength. You're going to make more money staying with the trend than going against it. And this chart looks better than 99% of them out there. If you want to top fish against the high of day yesterday, that makes sense. If you get close there and you stop out quickly if you're wrong, I'd feel more comfortable as a conservative bull than an aggressive bear. So this is a great example of which one are you playing. I get messages almost every day. Why were you bullish on Tesla? Why were you bearish on Tesla? Every play has an aggressive play and a conservative play. And it may depend on the market as to what hat I'm wearing, what trades I may already have on. So the aggressive trade here is the top fish because it's counter trend. The conservative play here is a bottom fish or a long because you're with the trend. Do you see that? So I can give you an aggressive play and a conservative play, a counter trend and a trend trade on every single chart you give me. I could give you one, both scenarios. So it just depends on what you want to play. The risk to reward behooves and benefits Microsoft longs more so because you're with the trend than the top fish. And now I like the risk if we're going up against yesterday's high, 27460, like on the money, that risk is great because it's going to be really low. So just know that I can answer you 2 different ways on every chart. It doesn't mean that my thesis is wrong, which I get a lot. People, I can't believe you were long Tesla, it dropped. Well, that was the counter trend scenario. So, okay. AI names. I played Sound yesterday. I did oil already. I played Sound off this 233 here, and I posted it in the chat room that Sound was approaching that 333, and you got a 5% bounce off that here, 5.41%. So I played that. That's the type of trades I'm taking with artificial intelligence names. Right now, they're losing volume, they're losing volatility, so I'm losing interest. JD. Hang Seng was red overnight. We have a daily inside bar. We're breaking below the low of yesterday. Your next support, 51.83. Bounces are for shorting with the trajectory of this chart. Donald, I did a whole webinar on futures trading, a big long one you can find on our website, excuse me, on YouTube. Thanks, Night Truck, my friend. I appreciate you. Rachel, I'll do SMH, and I just want to remind you that I typically don't chart the 3 times, 2 times ETFs. You really, really want to look at the underlying, because the leveraged ETFs, they have decay. We have a downtrend right now in semis, fighting to hold the 8 EMA, not really holding it. I would be a much more comfortable bear. I'm looking at the market out the corner of my eye, so I see that's going on. We pulled back a lot, so I'm factoring that in. And then I'm looking as to 4-hour lower highs, the more likely scenario. So I'm a more comfortable bear and in long SOXS or short SMH than I am long up here. All right, that's it for me. Thank you so much. I appreciate you being here. Hit that like button before you exit. Hit that subscribe button. Let's get our subscribers to 180,000. Let's get it done. Give me a follow on Twitter at CharkowLori. And TCGers, I will copy my notes over to you in just a second. Use stop losses and happy Valentine's Day.